Malik D, your financial credit guru, the hit maker, the score. Fox Soul's #1 financial literacy podcast. Today I have Miss Lorina Noble with Noble Agencies Incorporated. Guys, we need this insurance out here, and she's here today to break down what these many different insurance policies consist of, whole life, living life insurance policies, on how you guys can tap into these policies and use it as your bank. Miss Lorina Nobles, how you doing?
I am absolutely phenomenal, and I'm super excited to be here.
Tell us something about. Tell us a little something about these policies out here and how they can be properly utilized, especially dealing with the Black and brown communities.
Absolutely.
I mean, they need some type of streams of income. They need to know how to leverage their finances by using these policies, and we just need to know the moving parts consistent of these policies and how these individuals in the Black and brown community can't turn around and treat it like a hustle.
Absolutely. I'm excited to share that information with you. So, first and foremost, there's something I do want to address because there is a misconception about the Black and brown community when it comes to life insurance.
How so?
I'm glad you asked. I know for myself, I've been guilty. I hear conversations about it quite a bit where they say, the Black and brown community, we don't have life insurance,
That's
right?
true. Yeah.
They say all the time, Black people don't buy life insurance. Mm-hmm. Well, statistics say, as a matter of fact, Black and brown people buy more life insurance than anybody else.
But at a higher premium.
Statistics show 56% of African Americans purchase life insurance. When you look at the numbers as a whole, 52% of the full population buy life insurance, but 56% of African Americans buy life insurance, right? Here's the problem. We're underinsured. That is the problem that we're having. See, white America knows how to use the products, right? When you think about us, and I can speak for myself as well.
Right.
Growing up, I remember seeing the life insurance man come to my grandmother's house.
Me too. I remember seeing that as well too.
Yeah,
definitely.
Yeah, Grandma had life insurance. Grandma insured her. Grandma insured the kids.
They had a burial
grandkids.
Policy.
Absolutely, a burial policy. And see, that's what we as a whole, when you think of the Black and brown community, that's what we're familiar with, right? White America knows that they can use life insurance to transfer wealth, to protect their assets. They know that they can use life insurance while they're living, not just in death.
What type of policies are those that consist of allowing you to use your wealth while you still living as far as these life insurance policies?
I'm so glad that you asked. So first and foremost, there are 3 different types of life insurance, okay?
We're getting down to it.
All right, there's term life insurance, okay? Term basically covers your life for a specific period in time, okay?
Is that the most common?
That is the most common, one of the most common, and it depends on your period in life. So when you think about term, common uses, case uses, people use term when typically they are healthy, right? And they have a lot to protect, okay? So for instance, when you think about mortgages, when people are younger in age or they're in childbearing years, okay, they're protecting their mortgage. They may have a $400,000 mortgage, $300,000 mortgage, right? They have children that are growing up and that they have to protect. And typically when you look at a household, there's 2 incomes in the household, right? And one is the breadwinner, right?
Yeah.
When you think about what it could do to a household if the breadwinner passes away, that could totally change it'll
bring destruction.
Okay? And one of the things that people don't realize is that there are term policies that you can actually have that have living benefits. Okay. Now, what does that mean? That basically means because again, people think about life insurance.
Yeah.
They think about these policies and they think they can only use them in death.
Right.
Okay. However, let's say you get sick. How many of us know someone that's had a heart attack?
Plenty of
Stroke.
people that I know.
Definitely.
Right.
Especially in this day and age.
Absolutely.
Yeah.
Get diagnosed with
Yeah.
cancer. Right. These are real things that happen I'm sure all of us know someone that this has happened to, right? That could literally take someone out of work. Okay.
Right.
Right there, you speaking of. You think about that. That's a loss of income. What could that do to a family?
And if they have cancer, it can increase the cost of living
Absolutely.
substantially because
Absolutely.
chemotherapy and all that stuff. Yeah,
Yes. See,
that
you
the
get it.
insurance won't cover, medical won't cover.
Exactly.
They have to dip into their savings.
So how do these whole life insurance policies for the living that you can tap into actually work, and what's the name of that particular type of insurance policy?
Glad you asked about that too. I want to close real quick on those living benefits there with the term policy side of things, because when you think about having a term policy that has a living benefit, if any of those things happen, you get critically ill, terminally ill, chronically ill, you can literally pull up to 80% of your policies. People don't realize.
I was never aware of that. So
Yes.
that's what a
Me
term
either,
policy.
Dan.
Yes, with living benefits. Living benefits. Now, all term policies are not created equal.
Okay,
right?
Now, are those meaning they can be assigned? Does that mean like that J.G. Winthrop commercial where they'll buy your policy?
No, that's not what I'm speaking of.
This is actually where you.
This is an actual policy. For instance, the carrier, okay, let's say, for instance, hypothetically speaking, you have a $100,000 term policy with living benefits, right? And let's say you get diagnosed with cancer and you have to be out of work. You got to go through chemo, you're sick, and so forth. You would basically, because you've had that diagnosis and the medical professional has, co-signed, this is what's going on, you would basically make a claim with the insurance company, okay? And they would accelerate those benefits. So, and that's up to 80%. So if you have a $100,000 term policy with living benefits, you can literally accelerate. You could get up to $80,000.
You don't have to be terminally ill.
It can be chronically, terminally, or critically.
Okay.
No
ill.
penalties and no prepayment penalties or
no
anything
tax
like that?
issue, none of that. Okay.
It's life insurance. So it's not taxable.
Exactly. So they would send you a check for that. So let's say if you received that $80,000 check on that $100,000 policy, right? Then you would have $20,000 left towards your death benefit. People don't know that exists, okay? That's the first way that you can use your policy while you're living. And when you think about the next form of insurance, let's say whole life, right? A lot of us are familiar with whole life. When you think of whole life, you may think of like children's policies, right? When the baby's born, you get a policy on your brand new baby, you have a whole life policy, right? That's in place the whole entire life of that child, right? All the way through adulthood, grow old, and so forth. They have that policy. It also, whole life policies accrue cash value, right? A lot of people don't realize that you can put a whole life policy on a child at 10 days old, okay? 10 days old, you can go ahead and get a life insurance policy. If that child dies after that, it's paying out the death benefit, okay? Whole life is available your whole entire life. The premium stays the same, okay? It also accrues cash value. That's also that policy as well. When you think about grandma, getting the burial expenses, policy in place, that's a whole life policy that accrues cash value. Another interesting thing that I definitely want to bring up, which are a few fun facts that I'm sure most people don't know. Okay, creative ways of using whole life policies.
And that's living in policies.
While you are living.
Okay.
Absolutely.
I'd like to hear about this.
Okay.
Because I never heard about it.
Okay, well, let me enlighten you. What I'm going to give you guys a quick quiz, real quick. What is probably the number one vacation destination that most people like to take their kids to?
To the beach.
Disney.
Disney.
Okay.
Disney. Ding, 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 ding. Did you know Disney World, Disneyland, it would not exist if it were not for whole life insurance?
How so?
Did you know Walt Disney used his whole life policy to pull out cash out of that policy to start Walt Disney World, Disneyland?
How long had these
The
lived?
Disney company?
Yes.
Huh.
This is because he went to the banks for funding.
How long these policies been in existence?
They've always been in existence. People just didn't know about it. They just didn't know. And the problem is, it's not that these things aren't available.
Mm-hmm.
The problem is we just don't know how to use them. We haven't had the education. And that's exactly why platforms like this, Mr. Malik D, it's so valuable. And I'm so excited about what you're doing here because we must have the education. We have to have people like you to bring awareness. And not only Walt Disney. What about the Golden Arches?
Yeah.
A lot of people.
The original McDonald's
McDonald's, yes.
in San Diego, the original one that was started by the brothers,
Absolutely.
the two brothers.
A lot of people don't realize Ray Kroc was able to pull from his whole life policies, okay, in order to pay his employees, in order to grow McDonald's. People don't know that. This is how McDonald's became McDonald's. Whole life.
I saw the movie and I didn't even know that they didn't even bring that up.
They didn't. But pull out your phone and Google that right
No,
now. You'll find it.
I believe you.
True story.
I
Even
believe you.
JCPenney's, they actually survived the Great Depression, okay? That when the banks failed, real estate failed, every industry was failing in the Great Depression.
Right.
Life insurance, guess what happened? JCPenney was able to save his company and survive because he pulled out the cash value out of his whole life policies.
And he still was insured.
Absolutely.
Wow.
Absolutely.
For the amount that he actually initially got the policy for, he still was insured for that number?
He is still insured. Now, anytime that you do pull cash value out of your policy, it does diminish that face amount, okay? Now, you can pay that back. So what you may hear of the term infinite banking, right? Or be your own bank.
Yeah.
We hear this all the time. You know, you see it trending, you know, in social media. You see it everywhere, YouTube. Okay, this is what they're talking about, where you literally can be your own bank, okay? So people are actually buying homes by pulling the cash value out of policies.
Can you borrow against it too?
Absolutely.
Okay.
Absolutely.
Now that this
With no interest, zero.
That's because you're borrowing from yourself more.
Absolutely. Why go to the bank?
we're gonna take a quick break right quick. We're gonna take a little quick commercial back, so hold that thought. My question to you before the commercial break is a credit check required for some of these policies?
That's a very interesting question. A lot of people, you know, they want to know what exactly does it take to get life insurance, right? Well, there is a check, okay? And that is called the MIB, Medical Information Bureau. So what they're doing is they're pulling your medical information because they want to know how healthy you are before they actually insure your life and give you this policy.
Okay.
So they do a check, but it's a medical information bureau. It's like the credit bureau, but they're checking your medical information.
So
they want to know.
You have a medical report, and it's just like you just have a credit report, you got a medical report as well.
Absolutely.
Gotcha.
Absolutely. They want to know what meds you're taking, if you've had a heart attack, stroke, you know, you got any heart issues, you know, because that is a determining factor on how much you can get. You
On the
know,
policy.
on the policy, absolutely.
That
because you
also
do have to
affect your
qualify.
premium rates too, right?
Absolutely, you have to qualify. Age and health is what they're definitely looking at.
Now, being as though we dealing with the African American, black and brown communities,
Okay.
I mean, we wouldn't want to take a good situation like this as far as this living life policy that you can cash in and use it as your bank, because dealing with our community, people in our communities normally get a hold of something like this, and then they end up start to try to treat it like it's some type of hustle.
Right.
Trying to hook and crook, create a situation of trying to reinvent the wheel. On this podcast here, we actually, provide information, knowledge, lifelines, where people can use this information for the betterment of their financial, prosperity. You know what I mean? And for their financial success as far as involving themselves more financially, but in our communities. And I have to keep it real and I have to keep it right.
Please do.
They always try to treat something like this financially like a hustle. Now, is it anything in the play, lawful wise, that prevents our community from actually trying to reinvent or recreate the wheel to try to treat this as a hustle? Because we want to make sure that the information that you share with these insurance policies and this whole life and living life policies and things like that can actually be in existence, where they don't end up changing up the rules, changing up the statutes and things like that based upon our communities getting a hold of something and destroying it.
Excellent. I'm glad you brought that up, because you're right. We can get
Treat everything
creative.
like a hustle.
We can get creative.
Yeah.
We can get creative. And when you think about life insurance and what everyone must think about, and keep in consideration, insurance period is protection, okay? It is protecting you from the what ifs, right? Traditionally, it's to protect your assets, right? It's to protect your life, your family, okay? So you have to think about insurance as a long-term play, right? So, for instance, let me give you some examples. I know people that have bought homes, like literally with life insurance policies. Homes, they fund college educations, okay? Retirement.
Wow.
A lot of people don't realize you can supplement your retirement, okay, with a life insurance
Is it a
policy.
long, lengthy process of tapping into these policies and tapping into this policy that you can tap into for financial gain? Is it hard tapping into this policy? Because the moment when some people try to exercise their rights, if they have this type of policy from what you're sharing with us, and they actually go in and tap into it, what is the underlying criteria?
Okay.
How long does it take in order for you to actually cash in to get the resources and to get the funds out of these policies?
Great question. You're asking some phenomenal questions.
Listen, you're dealing with our community, and I want to make sure our community is properly educated with this information so they can take this and run with it.
Yes. Well, one of the biggest misconceptions here, because people see it trending, be your own bank, right? Infinite banking. It's like we've found out about that vocabulary and everybody's the expert and they feel like, oh, I can just go get me a policy.
Everybody got all the sense.
Right. Absolutely. But the truth of the matter is, okay, this is a long-term play. This is not a situation to where, oh, you can put $50 in a policy and you've been paying it for a year and you think you're going to pull out 50 grand.
Okay.
It does not work that way.
Okay.
Okay. It doesn't. You have to be willing to literally be your own bank. You have to literally be willing to put money into these policies, front load these policies. So I'm going to give you an example. Like one of the third policy type, when you think about, like, for instance, this will probably be very attractive for those people that are looking to make money in the markets, but at the same time not lose from the market, right? So, for instance, people that are like in cryptocurrency, okay? Let's say,
Which I am. I'm heavily invested into it, and so is my co-host, Mr. Dan Green.
I'm also in the futures market too.
Oh, okay. Awesome. So there's been people that have made quite a bit of money in the cryptocurrency
Absolutely.
market, right?
Absolutely.
And as we all know, cryptocurrency is very volatile,
Very, very
right?
volatile.
Very volatile.
I can attest to that.
Oh, I think we all can.
But when you get gains, you get gains.
You get gains,
Yeah.
right? Now, a lot of people don't realize they can literally take the lump sum that they've gained, put it into a policy. There's something called an index universal life policy, which basically allows you to earn from the markets. Like it hedged against like the S&P 500,
Really?
the NASDAQ 100. Absolutely.
That was
know
my
that.
question. Like,
Yes.
what's the difference between universal and whole life? Or is it
That so with whole life, okay, and universal has some similarities as whole life because number one, it does protect you your whole entire life. Okay, just like whole life, universal has that same capability. The difference is it has some flexibility, okay, which means that you can earn interest, right? So when you think about, you made some money in crypto, right? If you leave it in crypto, I mean, you can wake up tomorrow and
it's gone.
You could have six figures in crypto.
Or
and
it can
then
be gone.
Exactly. And it's gone tomorrow, right?
Yes.
You can literally take those gains, put that lump sum inside of an index universal life policy and have it perform with the S&P 500 or
Wow.
the NASDAQ.
So it's
right?
actually on the stock market.
There you are. But it's
Wow.
not directly in there, which means if the stock market tanks,
It's on that algorithm.
exactly. But if you can earn off of the gains,
Yes.
but if it tanks, you never lose because the
wow.
floor is at zero. You can never lose what you've put into your
You ever
policy.
heard of that, Dan?
It's called an index universal life policy, and that is the way it performs. So it protects your life the whole entire time. You gain with the market.
the floor would be the amount of the face value of the policy?
Exactly.
So you wouldn't lose. You could never lose that.
You could never lose
because
that.
that's what you guys guaranteed that you're going to pay out.
Absolutely.
That makes-
Absolutely. Absolutely.
So you can speculate, but if you do well, you can exceed the face value for the game.
Absolutely. And that's what white America, they've been doing this forever. We just didn't know. What did we know? We knew burial.
It's similar to like a self-directing IRA where people can invest the money in the IRA themselves and not be taxed on it until they actually pull it out. They can do whatever. You can buy real
Right.
estate. You can flip properties. You can trade currencies.
But
or
see,
futures
they're
and-
taxed,
But
though.
you can lose everything there, though.
Right.
You can get that down to zero. Even
Absolutely.
If it's, even you can lose money. But
Absolutely.
with the whole universal life, you can never lose
can-
more. You can only get back down to the face value.
Exactly.
Yeah, that's-
Exactly.
yeah.
That's strong.
That is.
Why-
Here's
That's,
another.
yeah, that's a backstop. I mean, that's you would really have to explain it to a lot of people for them to understand it.
Mm-hmm.
But that makes a lot of sense. I mean, that's a really strong investment, actually, in a way.
And
you
I never looked at life insurance that way, and
we never did.
And the
'Cause
thing
we
is-
didn't
And I'm an accountant, but I've never looked at it, that way.
And the
but-
thing is, you never lose because you got them locked in at that
Oh.
at that rate or
That
at that
base-
position where they at. So it never. I mean, even though
So
if
if you had
stock
a $200,000 policy at face value, you can never lose more than you can never get past the 200,000. Your loss could
Exactly.
never exceed that.
Exactly.
even though if the market crashed.
Even if it crashes down to zero.
Let's take another quick commercial break to pay these bills, but we're going to hop right back into this when we come back to school. Welcome back to the school. Back with Miss Lorina Nobles with Nobles Agency Incorporated. Did I pronounce that right?
You did.
Okay.
Noble without an S, though.
Okay.
Noble.
Pardon me. But anyway, I wanted to ask you a question.
Uh-huh.
Because something you said earlier before we went into the commercial break, you said these policies have been around for a while.
Mm-hmm.
Why is the black and brown community, with some individuals in the black and brown communities, just not finding out about this living life policy that you can use as your bank?
Well, I'm going to be quite honest with you. White America, they don't want us to know this. Think about it. Do you think they really want us to get ahead financially?
Absolutely not. It's a wealth transfer going on.
Absolutely. They want to keep the wealth. If they wanted us to know this, they would teach us this in schools. They don't. But instead, they're teaching us things that we'll never use, like what president chopped down a cherry tree and all this foolishness.
Which is meaningless.
Transgender studies.
Yeah, it adds no value
Facts.
to anything.
Exactly. They don't want us to know. And what is exciting is that now, because of the digital age, okay, we have access to more information.
Absolutely.
And we have access to platforms like yours, that is teaching, financial literacy, educating the Black and brown community. Because the truth is, if we know better, we'll do better. The fact is, we just don't know.
Wow.
Think about this. I know when I think back when the insurance man used to come to my grandmother's house, what did he look like?
He was a white man.
Absolutely. He was an older white man, middle-aged white man.
Yeah.
Do you really think he's coming to educate us on how to protect ourselves?
Absolutely
How to get ahead financially?
Absolutely
How
not.
to use life insurance the way he's using it? No. What he was coming to get was that big commission check.
Wow.
That's what he was coming for.
And as many as people that he can get up under his roster, as far as those policies that he was selling or serving or whatever, then the more commission that he gets off those policies.
Absolutely. He was just interested in the sale, not the education. That's why it is extremely important to know that insurance can be used in a number of ways, even retirement. A lot of people don't realize, first of all, when you think about retirement, 401k, people have been losing.
Where the 401ks right now are getting obliterated.
Exactly.
So they sucking all the wealth. They liquidating all the wealth out of the 401ks, out of the mutual funds, out of the all these little things they got going on with these, like I said, mutual funds, 401ks
that are tied to
annuities,
the stock market, because
annuities.
the stock market has lost substantial.
Absolutely.
It's liquidation
in the trillions of dollars. So the 401ks and IRAs that are tied to the stock market.
Yeah, they liquidate.
Lost a substantial amount of
course.
their value. Yeah.
And Black and brown people don't know what else to do with their money.
Right.
They don't know that they can take that money, instead of putting all that money into their 401k, they can put it in an index universal life policy, still benefit from the markets without losing. And then, at retirement age, that very same policy now pays them an income.
What type of income does it pay? Give us an instance. Like if you got this amount, if your policy consists of $1 million or $500,000, what would be the kickback? What would be the money that you can draw from that off this policy that you're talking about?
So each situation is different. So for instance, if this is something that one would be interested in as far as looking at using insurance as a retirement vehicle, it is important to sit down with a licensed professional so that they can go through,
such as yourself,
such as myself, so that they can look at your specific financial situation.
And by the way, how can they get in contact with you if they want to utilize your services? You're not just local with this; you're national with this.
Absolutely.
Okay, in all 50 states.
All 50 states.
What's your information that you want to talk to the podcast viewers and listeners so they can get in contact with you to get a little bit more proper education before they actually take that step to invest in these type of policies where they can go ahead and use it as they bank? What's your contact information?
They can actually go straight to my website at nobleagencyinc.com and just basically fill out the form. If they're looking for a retirement vehicle, just go straight to the website. There's a form there for retirement. Fill out that form. We'll get your information, and one of our agents will give you a call within 24, 48 hours.
Now, let me ask you this question. Are these policies expensive when you first initiate it?
Great question. Always remember, when you think about life insurance, you will never get a cheaper life insurance policy than you can get right now today, because it weighs on the things that determine your price is your age and your health. Okay? So you'll never be any more healthier or younger than you are today.
Just touching up on when these people invest into these policies.
Okay.
Are these policies expensive? And you
Oh,
state
it's the expense. Absolutely. So, of course, it depends on your health and your age. So, as of right now, okay, you will never get any cheaper. Okay. The problem why life insurance gets expensive is because people wait until they're sick. People wait until they're older. Okay. The younger you are, the cheaper your policy. The cheaper your policy. And when it comes
because
to
of the life expectancy with that policy.
exactly.
Right?
Exactly.
Okay.
They're cheaper. Way cheaper because you're young, you're healthy. They can, because this is something that's important for people to know. Okay. They're using your
Just like the banks.
It's just like the banks.
Yeah.
They do. They
They
use
invest
your
in real
money.
estate. They invest in other things.
Exactly. So they're using your money over a period of time. Okay. The difference with the banks and the insurance companies have
Hold that thought. Let's take
Okay.
another quick break so we can pay. Nobles Agencies Incorporated. I don't want to keep mixing up that word or whatever. I mean, it's already on the podcast so people can
Yes.
go reflect back to it. But anyway, let's get back to what we were talking about in regards to
life insurance policies, the pricing, and so forth. So, yes, the thing is, first and foremost, one thing that's guaranteed, we're all going to die.
Oh,
Okay?
absolutely.
You're going to die.
It's inevitable.
It's inevitable. We just don't know when. You can die young, you can die old, you can die middle age. I mean, I've had numerous people in my personal family to die young in their 20s. Okay? So,
And that goes back to what I said about the life expectancy not being what it used to be compared to back in the olden times.
anything can happen.
Okay. You talk about a subset of the community or whatever. You talking about, say, young black males? I mean, black males.
No.
You may have a point there.
I'm
city males, but
No, I'm talking about period in the African American communities. Period. You got people dropping dead from heart attacks, from strokes, from, like I said, from poisoning the foods. It ain't like it used to be where we grew our foods and the foods wasn't contaminated like that. Because a part of it is, part of that is like I said, coming from the food. And other things that they putting out here in the atmosphere.
Absolutely.
So, that's why I keep reflecting back that life expectancy is not what it used to be.
okay.
Definitely. I definitely see you with the food situation. They're feeding us science projects nowadays, right?
And then they're coming out, and then also they're gonna start coming out with the 3D printed food too. You ever heard about
GMO stuff and all that?
You ever heard about the 3D printed food?
Oh my gosh. Ooh,
So-
whole nother podcast.
They can do anything
right?
with a 3D printer now, huh?
I mean, they are.
They can
literally-
build a house with one.
I mean, they are. They're building a lot of properties, a lot of houses with 3D. But I'm saying though, with these 3D printed foods, they can print these foods out, these meats, and make it seem like it's real steak, real meats, and it's poison. You are eating
Poison.
plastic.
Yeah. I've seen a few videos on that on YouTube.
But let's get back to the insurance.
Absolutely.
Good idea.
So, as I was saying, it's important to sit down with a licensed professional so that they can analyze your specific situation because everyone's different. Everyone has a different level of risk. One person who says, I want to use life insurance as an instrument for retirement may be
Right.
totally different from the next. One person may say, hey, I just need, at least $70,000 a year for retirement, where someone else may say, hey, I need $500,000. It just depends.
That's the question that I was asking.
It
about
depends
the number, right?
on the situation. So that's why we sit down with the family and we basically have a conversation of what retirement looks like for them. Okay? How much money they need for retirement. And then that way we're able to work out an illustration, show them the numbers, show them what it actually looks like, how much they would have to put into that policy each month, and then and the illustration would break that down and show you, hey, if you're what age do you plan to retire? If it's, hey, I plan to retire at 65, I need X amount of dollars to retire. We work out those numbers and show you exactly what that
Wow.
looks like.
So the numbers will be substantially different for someone who says they come to you at age 60 rather than someone comes to you at age 35.
Absolutely.
The numbers will be drastically different.
Absolutely. And I'm going to tell you this. This is where we drop the ball a lot, and white America doesn't, okay? The minute their kids are born, remember, once you have a child, okay, at day 10, you can put a policy on them. You can put an index universal life policy on a child, okay? People will put a $1 million policy on a child.
But is it expensive to put that policy on that child when that child is first born? Is it expensive? Because I know, like you said, from the age bracket of an individual, of a human that you putting this policy on, you said the younger they are, is the better the policy will be as far as the number, as far as the money that you
Absolutely.
invested.
It'd be cheaper.
It'd be cheaper.
Way cheaper.
So what would that cheaper price look like from a child that's 10 years old versus a child that's getting that put on them, or an adult that's getting that put on them? If you can break that down.
So I'll give you some examples. And again, each carrier is different and depending on the needs of the person. So I've seen like I know a client that got an index universal life policy on a child, cost them about maybe $200 a month, $250, somewhere between $200 to $250, and they got $1 million.
That's $1 million.
That's $1 million policy. People go out to eat and spend $250. Hey. People go to the club, have girls' night out and spend $250.
Yeah, you put that in your gas tank.
Tell me about it. You think about having a night out on the town, right? And right now I want to address the ladies because I'm a woman myself. Absolutely. I was a single parent. Raised my child by myself. Right. And sometimes when I think back about some of the financial decisions I made, how I squandered money. Wow. Think about going out a night out with your girlfriends. You got to have the fresh outfit. The fresh shoes, you get your hair done, nails done, all that. You spent, and then go out to eat, go to the club, have a couple drinks. You've spent $250. Way over $250. Okay? That is your child's index universal life policy.
That you can tap into.
That you can tap into. So when your child is ready to go to college, you have college money. Wow. Right? Or let's say your child doesn't want to go to college, but they want to start a business. Wow. You have money for that business. The seed money, yep. Let's say your child now wants to buy a house. Guess what? They have money to purchase a house. You understand?
Yeah.
People don't realize how you can use insurance.
But my question once again, because I want to make sure I got the correct information as well as my viewers and my listeners. How long does it take to tap into these policies where you can pull back the money out of it?
You can start tapping into it. Like if you want to pull out of that, remember now, you have to fund it. Okay. So if you put in,
how long does it take to fund it?
So let's say today I have a child, right? And I want $1 million policy on that child. Okay. Okay. Let's say hypothetically speaking, I paid $250 a month, right? Okay. That policy is now gaining its, first of all, remember, index universal life policy, it is performing with the market, right? So you're earning off of the market, you'll never lose. So you're earning interest depending on the market. Now, okay, I can't tell you the percentages because, again, it depends on where the market is, but you'll never lose. So if you think about how long it takes to start accruing cash, so if you're paying for a $250 a month policy, okay, you have to have the money in the policy in order to pull it out.
How much?
So you can pull out, if you front loaded it.
How much money do you need to have in the policy before you actually start pulling money out of the policy?
You can pull the money out anytime that.
Explain the term front load because a lot of people
front load. So, okay. So, for instance, front loading is like, for instance, you have money in the bank. sitting in the bank. How much does the bank pay you in interest?
1%, 2% probably.
Right? Not even that.
Yeah, not even that.
0.14.
Yeah. I'm just saying.
You know.
Which is nothing.
Nothing, right? So instead of putting that money in the bank, okay, instead of having that money in the bank, you take that money and out of the bank and put it in your policy, okay?
Wow.
You're front loading it.
Okay.
If you need that money out, okay, let's say,
Let's
next
take another
month.
quick. We got to take another
Okay.
quick commercial break. We got to pay these bills. Be right back at you. Welcome back to the school. We are now back with Miss Lorina Noble. Let's get back to the question of the topic. You're talking about front loading.
Yes. Great question. So, yes, again, let's say you have money sitting in the bank, because a lot of people do, we're not all broke, okay?
Yeah.
There's people that have money sitting in the bank,
Yeah.
but it's just sitting in the bank. It's not, they could actually earn more on their money than sitting it in the bank. Well, instead of letting that money sit in the bank, you can front load a policy. You can get an IUL, put that money into the IUL. Let's say you put $20K in there today, right?
Mm-hmm.
Something happened and you're like, oh, I need my money. You have access to your money. You can get your money out of it right away if you need to pull your money out of your policy. The key here is to know that, instead of letting it sit in the bank, let your money grow interest, okay, in a safe vehicle.
Right.
Yes, we can take it. We can put it in the stock market.
That would never depreciate.
Never depreciate. You will never, your money would never go below what you put in there.
Wow.
That is amazing, okay, to be able to benefit off of the market and not
So
lose.
let me understand. So if I had a $1 million policy, and then I had 200,000 in the bank, I want to put the 200,000 in there. So you're saying even with the investments, if you guys took that money and put it in the market, I know I wouldn't lose the $1 million.
Right.
But you're saying I wouldn't lose the 200,000 either?
You wouldn't lose it. It's your
Even
money.
if the market crashed.
Even if the market crashes, you do not lose your money.
The initial investment,
you
the
do not.
front end investment.
You do not.
I know the face value is
Right.
there. Oh,
Your money
Oh,
that
okay.
you just
Now,
put in there.
I misunderstood it before when we first talked. So you're saying,
Oh, yeah. This is what white America knows, but we don't.
I didn't.
I damn sure
I did
didn't know
not.
about
I'm
it.
an accountant.
I wouldn't know if I wasn't in the
I
industry.
damn sure didn't know about that.
That's powerful.
It's very powerful. Imagine if more of us knew this.
Yeah, that's pretty strong.
Very.
It is mind blowing because I didn't know policies like that exist. I thought the whole life, you know what I'm saying? I thought-
Universal and all that.
yeah,
but
I
you
the
didn't
traditional policies and things
Yeah.
like that.
cash
They-
surrender value.
they
You
cover
hear about
you-
the
they
cash
co-
surrender value.
they
You know,
cover
that's
you when
just
you're dead.
your premiums, that built up or whatever. that you-
Index Universal Life, yes.
Index Universal.
Yes.
Now, how long has Index Universal been around? Is that a recent?
No, it's been a while. Well,
Within the last 10 years, maybe.
yeah, it has been. Yes.
Okay,
sure.
that's what I was
been
thinking.
it's been in the industry I've been in the industry for 6 years. So since I've been here, it's always been here.
Index Universal.
Yes, an IUL.
So let's talk about these different policies that cover like properties and things like that, damages to your properties.
Well,
Property and casualty, that's another line of business. Just like life insurance protects your life, your assets, property and casualty protects your property. So, for instance, if your house burns down, a flood, your vehicle.
So that's different from what you're talking about.
Totally different.
Okay, gotcha.
Totally
'Cause
different.
I had to break that down to separate that so people won't be confused thinking that this policy right here has something to do with the policy that covers property.
Right. Totally different. Totally different product. It is an insurance product, but a different line. One protects your life, one protects your property.
So a lot of people don't know that coming
They
out of
don't.
the black and brown communities.
They don't.
The lack of. And I just want to make sure from the information that we discussing right now and the knowledge that you have definitely put on the table for the community that they don't end up taking something like this right here and turning it into a hustle.
You know, we have to look at our finances as a long-term play. You know, it's important.
Absolutely. And
It's
I tell
important.
my clients that all the time.
Absolutely.
And I'm pretty sure you do too, Dan.
Yes.
Yes, this is a long-term play. Because one thing's guaranteed, we're gonna die. Okay? We just don't know when. And hopefully you're gonna die
I
so
prefer.
you don't want to outlive your
Yeah.
money.
Nah.
Exactly. The key is knowledge. See, like
Absolutely.
the lack of ignorance. You know, you just don't know what you don't know.
You don't.
And a lot of people in the minority communities are not aware of the alternatives. They just, you know, and the savings rates are so far down. Well, in the minority communities, overall the rates are up. But in terms of the minority, people don't save, people don't invest. They live for today.
That's a fact.
I'm gonna tell you right now, Dan, Lorina. I mean, they get ready to be in some real big trouble. You know, we in the trouble now, but I'm saying they really getting ready to see some really dark times that's getting ready to, you know,
Yes.
creep upon them. I mean, and a lot of them, like you said, in the minority in our communities and things like that, they don't properly take the time out to save because of a lack of financial literacy.
Exactly.
I mean, you know,
Exactly.
but they are in for some real serious, deep economic downturn times that's get ready to hit them like no other.
Which typically happens when you have a major downturn in the economy. The minority communities tend to suffer more
Absolutely.
than the general population.
It's by design.
Oh, everything is by design. I mean,
design.
you know, it's once again, like I said, it's a wealth transfer. I mean, you know, with this economy, this monetary system, get ready to change over to the digital currency system and things like that. And a lot of that's another
nother
That's a whole
podcast.
nother
Woo.
podcast. But I'm just putting it out
Yes.
there so you know,
Yes.
because our community, you know, they don't really keep up with what's going on, and they don't know what's going on, and some of them just choose to be in the space where they at. That mean that they don't want to know what's going on.
And the expression "ignorance is bliss" is incorrect.
Oh yeah,
Ignorance is not bliss.
And what you used to call it, Dan, bread and circuses.
Yep, the term bread and circuses.
Bread and circuses.
Everybody needs to go look that up. The origin of bread and circuses, and that's what we're living in today.
But people are so gone, man. I mean, they are really, really gone out here. I mean, look at the crime. You could tell they're gone. I mean, even when you're out here driving on the highways, it's like, I really believe that they turned on a switch. And they got them so doofed out here right now because they are really doof when it comes down to financial literacy.
Yes. Yes.
And then they look at you like you foreign, like you an alien, or like you stupid when you start to try to like really, really pull them up by the waist straps and, you know, try to give them some game. I mean, I'm on this podcast here, I'm not looking to save everybody. I'm not looking to try to educate everybody. But as long as my viewers and my listeners, those who are viewing and listening, decide to take this information or financial information or financial plays that we're displaying on the school podcast, then those are the ones that I'm trying to uplift.
Absolutely.
So-
We are the change.
Oh, yeah, we got to be the
Right.
change.
Yes.
We have to be.
Absolutely.
I mean, you know, but pretty much, you know, we really appreciate you coming on this podcast, building with us, letting us know about these insurance policies that the community can definitely tap into.
Absolutely.
And I'm glad to hear that they can't treat it like a hustle.
Oh man.
Once again, Miss Lorina, we appreciate you coming on the
I
podcast.
appreciate you.
We're gonna get you back on this podcast pretty soon. Malik D, your financial credit guru, the hit maker, the score.
Good day, social media world. Malik D, your credit guru, the hit maker, the score. Over 50% of small businesses have been shut down due to the global pandemic. And the ones that are left still face closing down due to the lack of capital. During these times, personal credit as well as business credit is essential to being able to sustain your businesses through this pandemic. I'm pleased to announce my new product, the Elite Business Builder Credit Builder Platform. The Elite Business Credit Builder Platform is designed to help business owners obtain $50,000 to $250,000 in business credit for their businesses that is not connected to their Social Security number. That's your personal social security number. It's a platform that will walk you through step by step on how to properly set up your LLC corporation, corporations, business address, phone numbers, 411 listing, website, and EIN number with the IRS so the underwriters will not deny your loan. The platform will also show you how to get a free business DNB number, that's Dun & Bradstreet, a business credit report, and we'll even give you a database of lenders that will extend you thousands of dollars of credit to purchase office supplies, computers, fuel, and many other things your business needs to survive during this harsh economical climate. After about 120 business days of using the platform to build your business credit profile, you will get access to lenders that will lend up to $250,000 to your business just off the strength of your company's business credit profile, despite your personal credit. And if you have questions or you run into problems along the way, you will have your own business credit advisor to help you through. Click the link below or in my bio to get started, and I will get back to you personally to walk you through the process. I'll see you on the other side. Malik D, your credit guru, the hit maker to score.